Mayuresh, what will be your view on PSU banks? Do you think they can correct further?
No, again, Pankaj, a large component for the PSU space would also be how the non-interest income component moves. And with the fall in yields that we've probably seen and witnessed over the past few weeks in quarters, there is significant traction and gain expected to come on that front. On the core business, on the NII front, I think the credit growth is still languishing, and with the demonetization playing out negatively for consumer-driven stocks, as the market perceives. My own sense is that the recovery in credit growth is very well delayed to the first half of FY18. Having said that, PSU banks probably have a larger element of credit cost because the asset quality pressures, probably having stabilized, still remain onto the stiff system in terms of stress coming through sectors like steel, real estate, which can continue over the next 2 quarters. So largely, again, I think valuations within the mid-cap PSU space are extremely attractive, but capital adequacy seems to be an issue there. The large-cap PSU banks are relatively better placed in terms of stable asset quality, capital adequacy remaining strong, CASA ratios relatively better, and quite comparable to some of the larger private sector banks as well for a few of them. But again, I think it's going to be a tough call to make in terms of how earnings will pan out. So the larger call here would be to stick with the larger PSU bank names in a market conditions like these, though I think the non-interest component gains can be quite significant on the mid-cap PSU portfolio as well.
Right. Mayuresh, in terms of some of these NBFCs, are they starting to look attractive? Are they starting to look interesting after the correction that we've seen in the last 45 days?
So again, I think the fall has been quite brutal, Pankaj, and the elevated valuations that these stocks were trading at, I think the earnings are not going to come through for the larger part of FY17. Now, the entire theme that the market is probably banking upon is over the next 2 quarters, as earnings ground rates get built into the cost, which have already started playing out on stock prices. In the first half of FY18, is there significant traction seen on their individual businesses? Now, within the NBFC space itself, as we've discussed earlier, the urban NBFC-facing businesses might recover faster. The rural-facing businesses might recover as well. But again, I think the time lag is a little bit of an uncertainty at this point of time. So rural-focused NBFCs, which is into transport financing, equipment financing, might still feel the brunt in terms of both a volume and a value degrowth, which nobody is sure or certain about at this point of time. So largely, again, I think I'll still wait for declines, numbers to probably come through management commentaries, the expectations in terms of the landscape going ahead. But again, I think on the larger parameter within the BFSI space, as I said, housing finance companies, if they decline significantly, and the retail-oriented ones appear to be far better placed in terms of both asset quality perspective as well as a bounce back in terms of growth coming in strongly rather than in a slow and a gradual manner. So I think HFCs with a retail-oriented focus and the other NBFCs which are more on the consumer durable business, I'll wait for results to probably come through.
All right. Ratish, have you had a look at BEML? BEML is a stock that rallied very strongly a day earlier when the markets were cracking down. It was up 3%. Even today, it's up 1.5%. It, in a presentation to investors, gave an update on its order book, which is looking very strong. And they're hopeful of getting fresh orders of worth 5,000 crore rupees next year. What should investors do with BEML? It is continuing to move higher when the markets are breaking down.
I feel these are the stocks like BEML, BEL. These are the stocks which doesn't have an impact, due to demonetization. So market is giving better valuation to these stocks wherever there is a clear visibility of the earnings going forward. So I feel that could be the reason why and thanks to the strong order book, like BEL, BEML, all these stocks are getting re-rated and there is a buy interest is seen in these stocks.
Do you have a target for BEML?
This point of time, I don't remember the targets.
Sumit, have you had a look on stocks like BEML, Engineers India, PFC? Any calls on any of these counters?
Yes, absolutely, Anisha. See, BML has given a good upside move in last couple of days, and looking at the chart, it seems that it's a breakout on charts. Now it's presently quoting at around 975 levels. I think immediately from present levels, there is a possibility that in BML we can see a move till 1000, and that would be a psychological resistance. As soon as 1000 levels are taken away, we can see a extended rally till 1070, 1080 levels. So yes, overall the counter is looking strong. Anyone who has taken positions in last couple of days can hold on the existing positions, and if anyone wants to initiate a fresh long positions, then they can initiate at CMP, because immediately the counter is looking strong for the upside target of 1000 and then 1070 levels in next couple of days. So yes, one can initiate long positions.
All right, so positive on BEML. Gaurav, what have you seen in some of these housing finance companies? Case in point is India Bulls Housing Finance. That one is looking weak. Would you look to buy this stock at all, or do you think it will take some time to recover? In the entire housing finance space, do you have any buy picks?
I don't see too much of a buying happening, although I would say that the intensity of shorts that has certainly reduced, and if there's a bounce back in Nifty, say even of 1 percentage points, all of these HFCs, whether it is LIC, whether it is L&T Finance, whether it is names like India Bull Housing Finance, they'll see a bounce back. So at these levels, probably India Bull Housing Finance is the only name that is looking ripe for a bounce back. So if it holds around these levels, 640 or so, with a stop loss of 632, one can go long for 660, 670. Again, it's a technical bounce. I'm talking about a 4-5% bounce can be seen, and the same goes for L&T Finance. That is one name that can see 86, 87 kind of levels. So with a stop loss of 81.5, one can go long on that. Probably I would wait a little bit on LIC Housing Finance, but a couple of names are looking decent to go long into.
Right. How would you look at Bharti Infratel? Now, that's a name which has corrected quite substantially. Do you think that Bharti Infratel is interesting for a buy? It's been in a range for really a while.
I would not ascribe a buying here. You know, it's after a long time, it's broken 350 levels from where we saw multiple times strong long positions getting built. So let it cross those levels. If it sustains those levels, then only it makes a sense to buy. Otherwise, you can see a couple of points bounce back from here, but then it would be sold into.
Right. Mayuresh, how would you look at something like a Prestige Estate? So in the market which has gone down 4-5% and in which mid caps have corrected, Prestige Estate has gone up from 145 to 175. Do you still believe that it's a buy?
No, again, I think if you look at how the portfolio for Prestige pans out, there is annuity income which comes through as a portion of its top line as well. So that becomes a safeguard mechanism in terms of a slowdown if one really expects to come on the residential side. Again, largely I think the uncertainty related to how demonetization is played out on real estate stocks in general in terms of how demand will come through and whether buying will come through in terms of new projects get launched, because the general perception here again is that buyers probably are waiting for better entry points and negotiations with developers to probably start booking into. So again, I think it's that uncertainty period for real estate developers at this point of time, and though listed players probably are far better placed than the unorganized sector where a large component of the black-white transaction probably was happening in the system. My own sense is that there would be better entry points. And again, I think one really needs to understand the cash flow dynamics for the industry as a whole, with inventory levels still elevated in the system as a whole, pre-sales velocity not picking up to the extent that one really expects it to be. Largely, again, I think cash flows will be constrained as we've probably seen over the last 2 years. So I think the cyclical recovery might take some time, maybe delayed by a couple of quarters. So my own sense is that better entry points will prevail. So an indirect play on the overall sector can be housing finance companies, where I think you'll get a larger gamut of entry points across developers, across properties and across regions, which is far more diversified than having a centric oriented location that a few developers might be having in their portfolio at this point of time.
Right. Gaurav, just before we talk about Prestige Estate, just wanted to highlight that markets are now into green. So opened down about 20 points, 7,555 is the low of the day, and now we are 7,980. Gaurav, how would you say the positioning in the market is? Do you believe that this can be a bottom, 7,957, which is today's low? Because quite some time between this 79 to 8,000, markets have made near-term bottoms.
I would not play for a bottom, and neither I would say that we are near the bottom. The reason being that we have seen a small bounce today, and if you look at the positioning, we have seen decent amount of selling from FIs in terms of futures, whether it is stock or index futures. Look at the kind of trading that we are seeing in 8,100, 8,050 call options. So I would say, as long as Nifty is below 8,050, I would not play for a reversal sort of in the market. But yes, if we have an expiry above 8,000, things might be better in the first week of Jan. But if we have an expiry below 8,000, then I think it will spell some more trouble for the markets in coming days.
Right. If we have an expiry below
8,000 spot.
8,000. So the expiry is next Thursday, right? So it's about a week's time from now. What is the positioning, right? Still, there are a lot of put writers at 8,000.
There were multiple writings happening at 8,000 put option. When we started the series, it started with one of the highest buy concentration in the last couple of years. It started somewhere around 80-85 lakhs in the first day of the new series, and that was seen in first time in many months that the first day has seen such amount of OI concentration. We were up about 8,000 for major part of the series. It's just that couple of days we have seen the Nifty trending towards 8,000, breaking 8,000. So it will have a lot of psychological impact on the trading. If there's a possibility that we have a weekly close below 8,000, there can be some sort of delta hedging that can come into the play, or people can outright go and short Nifty. But if there's a sustainability of 8,000, then I think there can be a risk of 30-40 points, and we might not see aggressive selling from these levels.
Right. Mayuresh, Gaurav, of course, looks at the derivative data and not on the fundamental side of the market. And that's why he's looking at data in terms of where flows can happen, or, how flows can come on the negative side. But at what level, as a, fundamental analyst, you would start to allocate money? Do you believe at Nifty level, the market downside is limited and one should start to put some money in the market?
Oh, absolutely. In fact, I have started allocating money into the markets sporadically in sectors that I just mentioned. And largely, again, I think there's no definite time point that you can probably pinpoint and say that the bottom for the market has been nailed, and that's historically proven. Yes, I think the markets are seeing headwinds in form of what Trump might say in terms of their infrastructure development policy, in terms of tax cuts, in terms of corporate taxes coming down, and that is probably driving investments towards the dollar in a significant manner, simultaneously leading to a sell-off probably in the emerging equity markets as well as the bond markets. That arbitrage between a 10-year US note and an emerging 10-year note has probably reduced a fair bit. And if these policy statements are more constructive in the coming few weeks, as he gets formally elected, my own sense is that the dollar flow will still continue. What happens with the rebalancing in terms of the Chinese yuan, in terms of their allocation at the beginning of the year in terms of dollar assets, even that has a significant say in terms of how emerging asset currencies will pan out and the kind of pressure that we'll probably see on them. Third, I think the overall crude scenario, I think one is really expecting crude not to move up below above $60 a barrel. But if that happens, I think the entire equation from an emerging perspective and specifically an India perspective changes significantly if it starts moving significantly higher than $60 a barrel. And fourth, I think the more important aspect domestically will be budget. So I think the fund flows, specifically from a foreign investor perspective, will be dependent and divergent on a whole host of factors. And again, in dollar terms, Pankaj, FIs have hardly made any money on index over the past year and a half. So largely, again, I think it's going to be a play on how developed markets will probably function over the next year and a half. And within the emerging pack, which economies will function. And again, in that sense, again, I still feel and perceive that India still stands out among the commodity-driven or the export-driven economies, because we are still domestically driven at this point of time, and the reform-oriented processes still continue, which can get reflected adequately in the budget to come.
Thank you so much, gentlemen, for joining us this morning. Mayuresh, just before we go, any disclosures?
Pankaj, the stock sectors that we probably mentioned, I do not have any personal holdings, but it is possible we have discussed this with our clients, and we may be holding these stocks on behalf of our clients and our schemes.
Sumit, disclosures for you?
Yes, Pankaj, it's better to assume that our clients might have position on these stocks which we have discussed. Thank you very much.
Gaurav, disclosures for you?
No personal holdings in the stocks discussed today, but it's possible that we may have recommended to our clients LKP.
Right. Finally, Ritesh, disclosures for you?
I do not hold any stock, whatever we discussed. We have recommended this stock to many of our clients. Clients might be holding. Thanks.
Thank you so much, gentlemen, and wish you again a very, very Merry Christmas.